Good afternoon. Happy Friday. This is Sean LaBelle of the Decker Hewitt Group. It was a negative week here in most North American markets as we did see a bit of a sell-off on Friday. Looked like it was actually a bit of capitulation out of investors as those recently strong sectors like the energy names, the financials, the materials, those all came under heavy selling pressure, which is probably the first time this year that we've just seen selling across the board. There were no sectors that were in the green on Friday. Moving markets lower was a bit of Fed speak where U.S. Fed Chair Jerome Powell was talking at the International Monetary Fund. He did say that the U.S. Fed would be in favor now of perhaps getting ahead of the inflation fight. And what he means by this is that the U.S. Fed is probably going to increase their interest rates by 50 basis points at their May meeting. Now, these sort of 50 basis point rate hikes aren't unheard of. We saw that in Canada just a few weeks ago. We've also seen higher interest rate hikes, but there was still the possibility that the U.S. Fed would only increase their interest rate around 25 basis points. So now the market has basically moved to 100% for 50 basis points in the May meeting. So we just discussed that a little bit in this week's Market Watch Weekly, along with the continued conversation around inflation. And anytime we talk about inflation, we're always discussing the CPI, which is the Consumer Price Index. So there's just an interesting chart in there that looks at the U.S. 30-year mortgage rate. We are now at levels that we haven't seen in several years. So we do expect that to sort of rein in inflation because a big part of that is the U.S. housing market. There's also the discussion in there around U.S. GDP, as it's always important to remember that the U.S. economy, or rather the direction of GDP, dictates the direction of earnings, which of course dictates the direction of the market. We do expect this year to be an above trend year for the U.S. economy, looking to price in around a 2.5% GDP growth. Again, that's above the 2% trend that we've been discussing sort of in the last probably month and a half of this week, or of the Market Watch Weekly. So markets generally correlate quite well to the direction of U.S. GDP. So this week's Market Watch Weekly just breaks down that number a little bit more for you guys. So we'll end it there. Hope everyone enjoys the weekend, and we'll talk to you again next week. Cheers.